Awesome, thank you. Okay.
Yeah.
So the second half of this webinar, we're going to get into how NetSuite helps your business handle the latest revenue standards and how NetSuite can ultimately help you prepare for the change to 606. So taking a quick look at our agenda, we're going to start by looking at NetSuite and how it leverages that 5-step approach. We'll then get into your business process as it relates to revenue management, and we're going to take a look at NetSuite's leading business process. And I'm sure that's a term you've heard a lot of from NetSuite lately, and they have a great new process around revenue management. Third, we'll get into the dual reporting requirement, and we're going to show you how NetSuite handles the dual reporting requirement for the upcoming year. And then we'll get into complexity. So we're going to show you, a more complex revenue example and how NetSuite can combine arrangements, combine performance obligations into one contract. And then finally, we'll go into NetSuite and we'll give you a quick demo of advanced revenue management within the system from an end-to-end process standpoint, and we'll also take a look at some great reports that you would have in NetSuite. Okay, so NetSuite leverages the 5-step approach. So as Chris walked us through earlier in the presentation, on the left we have the 5 steps, and to the right in the the darker gray we have NetSuite's equivalent of that step. So step 1, identifying your customer contract. Within NetSuite, they introduce a new transaction type called a revenue arrangement. And what a revenue arrangement ultimately is it's the transaction that represents your contract with your customer. This arrangement is typically sourced from a sales transaction. So think of a sales order, a return authorization, maybe a standalone invoice. But if that's not the case, it can also be sourced from projects. Now, coming up to step 2 in identifying your performance obligations, NetSuite introduces a revenue element. So when we think of a sales order, you might have multiple lines on that sales order. Those lines, each one's going to correspond to a revenue element on your arrangement. Okay. These elements can then be assigned revenue rules, and you can have different rules for how you recognize your revenue per each element. Coming up to step 3, determining your transaction price. That's going to be your sales amount on your sales order or your source transaction. So if anyone ever makes a change to that amount, say on the sales order, the revenue arrangement is going to pull and update automatically based on that change. For instance, someone on your sales team might make a common error and enter the wrong sales amount. If they correct it, rest assured your revenue arrangement is updated. Step 4, coming into how we allocate the transaction price to performance obligations. NetSuite has a revenue allocations feature built right into the arrangement and with the elements. So here, taking into account the fair value price, NetSuite's going to distribute revenue from a sale across its elements in proportion to the calculated fair value amounts. So just because your sales rep sells, an item for a certain price and they may heavily discount that price, you can rest assured that this engine will correctly allocate your revenue for you. And then step 5, we have recognizing revenue when or as performance obligations are satisfied. Within NetSuite, we then have what's called a revenue plan. So we have actual plans and we have forecasted plans, and these are going to dictate when we're going to recognize the revenue, how much, and we'll also have a corresponding journal entry linked to them when it comes to time to post it to your GL. Okay. So on our next slide, we now have NetSuite's leading business process as it relates to the Advanced Revenue Management module. So on the top third of this slide, you're going to see that this top third is primarily based around your sales roles within your organizations. Think sales reps, think sales managers. And within the system, they might be responsible for order generation, entering sales orders, putting the items, determining, what discounts to give customers, and ultimately getting that in the system and getting it approved. So as they're entering these orders, you can rest assured that the fair value list price will be taken into account, and that's something the accountants can maintain separately to make sure, once this order is executed, you're ready for your allocation. So then coming down to the middle of this graphic, in that slightly darker green, we have our revenue manager role. And here's everything, related to revenue recognition. So as once, a sales order is approved, we would have a new arrangement consisting of its revenue elements, so that lines from the sales order. At this point, I can also call out that revenue arrangements support approvals. So every time a new arrangement is created, a revenue manager can go into the system, review the arrangement, review the allocations, make sure everything looks good, and approve it before you take the process any further. And now once that arrangement is in an approved state, NetSuite's RevRec rules are then going to dictate when and how our revenue plans, both the actual and forecast, are generated. With these plans in place, you can then start to recognize your revenue. And then also it's important to call out that NetSuite does have a reclassified deferred revenue function. So if you're ever in the point in which you've recognized more revenue than you previously deferred, that function can help reclassify the revenue back up to your balance sheet in an unbilled revenue asset account. It also handles scenarios in which maybe different items are posting to different deferred revenue accounts and you have an allocation. That will handle adjusting those balance sheet accounts as well. Okay. And then lastly, now coming down to the bottom third of our slide, we have the controller role. So they have a revenue recognition waterfall report they can produce in the system. They have a deferred revenue roll forward report. They also have some awesome other reports I'm going to show you. And ultimately, they're running those reports. They're reviewing the GL impact of everything that's happened above. Okay. So I have 2 more slides, then we're going to get into the demo. First concept I want to call out is that dual reporting requirement. So 2 important things before proceeding with this slide. One, NetSuite can help you with your transition to 606, but you do have to be on the advanced revenue management module. So if you're on the old module, you're used to terms like a revenue schedule and a revenue template. How you know you're on the new module is if you've been working with transactions like a revenue arrangement or a revenue plan. And then the second piece you're going to need from NetSuite is you're going to need the multi-book accounting module. Okay, so and you'll see how that comes into play, in this diagram. So today you're operating under your current GAAP standards. Coming up in 2018, you could be in a transition period where it might make sense for your organization to manage revenue in 2 separate books. One in your current GAAP rules, and that's going to be the one that posts to the GL. And from a 606 perspective, you can start setting up those arrangements and posting that to a separate book that doesn't interfere with your GL, but then allows you to run comparative financial reports. So you can start to see, the impact that 606 is going to take place. Now, how NetSuite ultimately handles this is when we talked about a sales order has an associated revenue arrangement. Well, in this example, one sales order would just have 2 arrangements, one arrangement posting to one book, one arrangement posting to the other. So now, for a private company, when it comes time for your cutover, in a little over a year from now, NetSuite has a transition process to help you make this cutover clean and easy. So ultimately what takes place is you close your books for 2018, you run through a small migration process, you ultimately are going to take a one-time adjustment, and then you're going to start using those 606 arrangements to interact with your primary book or your GL, and the other arrangements would then begin interacting with that other book under the old GAAP. Okay. Awesome. Okay, so next up we have how NetSuite can help you handle complex multi-element arrangements. And there's a tool within the system that's called merge revenue arrangements. So some common examples of where we see this tool is, you have a contract with one of your customers, but a couple months down the line, a change order is introduced. And this is going to impact when and how much revenue you're going to take. Natively in NetSuite, you would have 2 sales orders, one for the original, one for the change order, and NetSuite would create 2 arrangements for you. You can then merge those arrangements together and create a new arrangement. The history is still going to live on the old arrangements, but they wouldn't be active. And on this new arrangement, you can now reschedule and recast your revenue accordingly. Another common example we see this used for is, you have an agreement with your client, you have your first sales order, and then maybe halfway down the line of your contract, they do a partial return of some of the services or goods. In that scenario, revenue allocations might need to be adjusted So you can take both of your arrangements, again, merge them together, reallocate, and NetSuite can correctly, restate your revenue based off the new allocations. Okay. Awesome. All right, so now I'm going to go ahead and transition into NetSuite. And I'm going to give you, a brief overview of some of the setups, and then we'll look at, a sample sales order in the system. So the first key setup I want to call out are revenue recognition rules. So revenue recognition rules define how revenue recognition plans are generated in the system for each obligation or element. Okay? The rules are going to help you accomplish the following key things. So they're going to determine when to recognize revenue. Are these dates going to be user defined? Does the contract have specific, terms or a length? Or are they going to be based on an event? Are you going to start planning your revenue when you fulfill or when you bill against that sales order? The revenue rules are also then going to determine what's my source amount. Are we going to pull the full amount from the arrangement or contract with the customer? Or are we going to pull that amount just from an invoice or fulfillment or from a project record? Specifically when you're using projects and doing project percent complete. And then the last thing these rules handled is they help you update your plans when there's an end date change. So are you going to update all of your periods, or are you just going to update the remaining periods based off the end date change? Next, we have our items, and again, these would be, what the sales team would be entering onto your sales order. But there's some really important key fields here, right? So if I come down, you're going to see each item has its own revenue account assigned to it, and also a deferred revenue account assigned to it. To the right of that, you're going to see that each one's going to have a revenue recognition rule. So different items on a sales order can have different rules. Again. And then lastly, and most importantly, you have your revenue recognition event. So this is that trigger. So when you sell this item, what triggers us creating a revenue plan? Do we do it on revenue arrangement creation, so we immediately plan revenue as soon as the contract is approved? Or are we going to, again, do it on fulfillment, on project progress, or on billing? Okay. So then two of NetSuite's more advanced setups we have are NetSuite's fair value formulas. So these are the formulas that are going to help us determine how to calculate that fair value when we're doing revenue allocations. And then we have a fair value price list where we take a formula and we either assign it to a revenue category, and categories can be very useful, especially in the software vertical where we're talking about bundles, or you assign it to a specific item. So here you'll see we have a hardware category, based off a perpetual license, and where the fair value is going to be 80% of that list rate. If I scroll down just a bit, you'll also see an example of where we have a perpetual license, but we're telling the system that its fair value is $120,000. Okay. All right. So now I'm going to go ahead and close these setups, and I'm just going to open up a couple additional records. Okay. All right. So we've been talking a lot about sales orders. Here I have a sample sales order, and you're going to see I have 4 lines on the sales orders. So here we're selling 2 licenses, and you can see they have a contract term, and we can see when they're starting that contract with us and when it ends. And in addition, you're going to see we're going to be also selling them some training classes, and then some just general professional service that go along with our product. Okay. So once the sales order is approved, NetSuite's going to propose and create a revenue arrangement. Okay. So this arrangement is now going to represent that contract with the customer, and it's going to consist of revenue elements. So here are our lines on the arrangement. Again, these elements one-to-one relationship with those sales order lines, and they're going to call out the different items that we used. As we scroll towards the right, you'll see the list rate, what the discount was given per line item, and the ultimate sales amount. On our next tab, we have our allocation detail. So we have that sales amount, but now leveraging NetSuite's fair value formulas, we're going to begin to allocate our revenue. Okay. And if I go over to the right, you're going to see that we have our base fair value over here to the left, and we have in the step 2 result what we're ultimately saying is what we're going to recognize revenue for each element is right here. Okay. So now if I go back to my element page and continue to scroll to the right, again, you're going to see that allocation amount. Up towards the top, you can see the original transaction price and what was, either carved in or carved out, ultimately down at the line level. Over here, we can see the revenue recognition rules that were assigned to each item that came onto this arrangement. And it's also important to note that we can change those rules once this arrangement's created. So if someone's reviewing, they see an issue, they can come here, they make a change, then they approve it. And then you'll see start date, terms, if applicable. So I'm going to actually open one of these revenue recognition plans. So this one's, is the license. We're going to recognize it over a 12-term period. And I'm going to show you what the plan looks like. Okay. So as I drill in a couple pages, you're then going to see that, okay, NetSuite's going to tell us when and how much we're going to recognize for revenue. So here you see we're starting in November. And when you have recognized your revenue, you're also going to see that a journal entry is linked to this plan. Okay. Now, the revenue plan is, a really powerful aspect of this module, and you can really see its power from the different reporting options we have available. So I'm just going to take 2 seconds to open up a couple of reports. Okay. So the first report I have is our deferred revenue waterfall detail. Okay. And if we're looking at this report, you see I have it filtered for just this one sales order I have, but this would show you all of your revenue arrangements across your entire organization. You're going to see that, for each revenue arrangement, we have each individual element listed out, and it's going to show us what our deferred revenue balance is on the balance sheet. It's also going to indicate to us, is there any unplanned deferred revenue against one of these items? And then ultimately, it's going to show us, if, as this contract goes, here's our revenue and how it's going to waterfall over the periods. Now, another report that can help you, get into the details as to why, okay, maybe, why is a portion of this unplanned, is our deferred revenue reclassification report. So I'm just going to go ahead in here and adjust these dates. And this report's going to help us, determine, was there, a carved-out amount? So here I can see in that second, element, there was an amount that was carved out. So the amount that posted to a certain deferred revenue account was higher than what my ultimate revenue allocation was. And when that's the case, you can go in and run the reclassification function. So I can come in here. Oh, sorry, that's the wrong spot. I'm going to create my reclassification journal. And I'll go ahead and just create that journal entry. And as this runs, one thing that's important to call out is it looks like this module is a lot of different steps, but NetSuite has the tools built in to help you automate this. So you can automate revenue arrangement creation, plan creation. You can even automate the booking of these different journal entries in your system. Okay. So now that I've reclassified my revenue, and if I come back to my deferred revenue waterfall report, I'll just go ahead and I'll refresh that. And ultimately what we should see is that second line, because I've booked that journal entry, now that it's reclassified that deferred revenue to a different account, we're in a state in which we're perfectly planned out. Okay? And then these other two elements, the reason why they have some unplanned portions is because one of them is based on a fulfillment model for recognizing revenue. So as we deliver the training classes, we would come and fulfill and then recognize revenue. And the other one is more of a professional services model where we're going to recognize the revenue as we bill it. Okay. Just let me go ahead and close some of those reports. And then I'm just going to show you a few more reports in the system. Okay. So another powerful report in the system is your revenue recognition forecast. It really helps you understand what revenue you've recognized, what revenue is in your forecast and can be recognized in the future. So I'm going to go ahead and update this report to show it by accounting period so that we can get a true forecast view over, say, 12 or 13 months. So that forecast has been updated, and and you can see it show us when we're going to take revenue from a forecasted standpoint. And you'll see these different statuses. So, in a scenario in which you've recognized your revenue, your forecast would show that as recognized. If it's planned, it would show it as planned and when you're going to take it. And then in other examples, you have it just in a forecasted state because you're going to recognize this revenue again when you fulfill it, when you bill it. And you can leverage NetSuite's forecasting plans to, you may not necessarily know exactly when you're going to carry out those actions, but you can estimate and predict and act, try to place it in a period from a forecasting perspective. Okay. So then the last report I have for you, and let me just go ahead and refresh this report, is our deferred revenue roll forward by customer report. So again, just give this a chance to refresh. I'm running it for just one period, and here you can get a really good understanding of the new transactions. What revenue did I recognize during the period? Did I make any adjustments, like those reclassification entries? And what is my ending balance sitting in each one of these revenue accounts? Okay. All right. So I'm going to go back into the PowerPoint, and that is going to conclude our NetSuite demo of the Advanced Revenue Recognition module. So Michael, I'm going to turn it back to you, and we can field any questions.
Excellent. Thanks so much, Billy. Really appreciate it. We do have a few questions, and Billy, while I have you right now, we have one question that's for you, and Chris, I'm going to queue up some questions that are for you too. After that, but one question is the revenue arrangement module, is revenue arrangement available only in the advanced module?
That's correct. Now, the one tricky point there is, based off of when you purchased NetSuite, if you purchased it maybe I'd say more than a year and a half or 2 years ago, your revenue module was the older, the standard module. If you've purchased NetSuite in the past year, essentially the only module available is the advanced revenue module.
Great. Excellent. Okay. And Chris, a few questions for you if you want to get off mute here for us. And question for you is, did you say that contract accounting will not be allowed?
No, the contract accounting, there's the percentage of completion method and the completed contract method. The completed contract method will probably not be allowed, but what a lot of contractors will end up with is something somewhat similar to the current percentage of completion method, where revenue is recognized as progress towards the contract is made. Under the completed contract method, you only recognize revenue after when the contract is totally completed, and that's probably not going to be allowed.
Excellent, thank you. Another question for you, Chris. How does this revenue recognition principle relate to the matching principle of accounting?
Well, the matching principle in general is very vague. I don't think that it. I think it actually. The new guidance, because a lot of entities will be required to recognize certain things like variable consideration sooner than they have before, I think it adheres more towards the matching principle. What you're seeing, though, is a lot more of estimating and projecting and rather than just recognizing revenue based on historical information. So it's closer to more of a fair value type of model, which the profession seems to be going towards, rather than a historical model. But I think it still adheres to the matching principle.
Great, thank you. Last question I have for you here. How is timing of revenue recognition affected for companies currently recognizing contract revenue on a percentage of completion basis, so revenue and cost incurred over time?
Right. Well, as I just mentioned, I think a lot of entities that are still on the percentage of completion method generally will recognize revenue in a manner that's similar to that. However, you still have to go through the analysis of going through the tool to make sure. You shouldn't assume. You shouldn't assume, because, as I said, if you have things like multiple types of deliverables, multiple delivery dates, and any type of variable consideration, discounts, rebates, things like that, you could end up with recognizing revenue a little bit sooner. But in general, if you're using a percentage of completion now, you probably won't. Your basic revenue recognition will probably end up very similar to that under the new standard.
Great. I don't have any other questions in the queue right now. If anybody wants to enter those in now, we do have a couple more minutes. Excellent. And then, Billy, another question for you. This is a little bit more general question here on NetSuite. But is NetSuite a fully integrated system with accounting?
Yes, it is. NetSuite does not leverage subledgers. Everything is fully integrated to your GL.
Excellent. So that's the last of the questions that I have here. I would like to thank everyone for joining, and especially thank our presenters, Chris and Billy, today for their time. We will be sending out a follow-up email and a copy of this recording. So if any questions arise, please make sure to reach back out to us in that follow-up email. Also, make sure to check us out at sikich.com, S-I-K-I-C-H, for any information about our other service areas and our NetSuite practice. Thanks again to everyone, and have a great rest of your day.